Yo, what is good, guys? Welcome back for another video, and today I'm going to be talking about one of the best intraday strategies you can use while trading forex. Right, beginners, experienced, or advanced traders can learn a lot from this video because this strategy is actually very important. This is supply and demand, or as some people call it, order blocks. And I'm going to explain how you can use it with liquidity. So these are like very popular strategies, and I'm going to explain how you can use it as a day trader, forex trader, whatever you call yourself. But yeah, let's hop on the charts and get to the video. So this is GBP/USD on the 30-minute time frame, and this video I'm going to be explaining the best intraday trading strategy you can use, and today it is going to be supply and demand that we are talking about. So let's go ahead right now on the chart and let me start showing you examples of supply and demand zone. Supply and demand is like the best intraday trading strategy. Why? Because it's really common, it's really popular, and it actually works, and also it is very easy to spot on the chart. So yeah, I'm actually like scrolling past looking for a very good example so I can show you guys. So this is 30 minutes time frame, right? And still looking. So GBP/USD has currently just been pushing up, so you can see what I'm saying. GBP/USD has just been going up lately, and that's because of some recent happenings after Trump got in. So right now I'm going to go ahead and show you this example right now. Okay, I thought I saw something. It was actually not a good zone for an example. So I'm actually like, why is taking this long? Because this is not like a pre-plan video where I'll come already plan everything and all that. No, like this is me coming on the chart like at the moment and showing you a good zone. So right now we have a zone right here. We have a supply zone. Remember, we're talking about supply and demand. Now, what is a supply zone? A supply zone is a point in price, right, where the market leaves an opposite candle before an impulsive push to the downside. You can see opposite candle blue, which is the buy, and then the next sell, which is gray for me. Normally sell is red for generally for everybody. So you see an impulsive move to the downside. So what the market do? Market has created a supply zone. And what is a supply zone? It's a point in price where people were interested in selling from. Banks, institutions were interested in selling from. And you can see exactly what happened from the zone, right? Market dumped massively from the supply zone. So yeah, you can see it. Actually, it will give you that's one thing I really like about supply and demand, is to give you like very good risk reward. So you can see this is the 1 to 6 trade cut from that supply zone right there. So then what is demand? Demand is now the opposite. Instead of demand being a sell, a demand is for buy, a point in price where the market leaves an opposite candle, then an impulsive move to the upside, meaning that point in price was triggered by, or that point in price was seen as an interesting point for institution, banks, or big players in the market to buy from. So you should be interested in price coming back there and you've taken a buy from there. So I'm going to go ahead and show you an example of demand. So I think now I've explained it very well. So this is actually a good example, very good example. So see here, right here, a small demand zone that actually still worked perfectly. You can see what I'm talking about, worked perfectly. So let's see, you took the buy from here, you saw your demand zone, right? You took your buy from here. You can see that this trade would have actually gone to your take profits. If you targeted, this is you want to hit very nice reward. If you are targeted this high right here, like this high right here, right? You see, that even if you want to go all the way to this week, you will see, let me even show it. You will see, if you want to go all the way to that week, you see that price would have hit in your take profits. So this zone, let me zoom in so you can see it. Look at an opposite candle before an impulsive move to the upside is your demand zone. Flip it to the opposite side, an impulsive move before a selling or 3, 4, 5 consecutive candles is your supply zone. So you can see for the demand zone, we have opposite candle 1, 2, 3, massive, very massive buying candle. So it has formed a demand zone. Then you can see on the supply zone we had how many? 1, 2, 3, 4, about 4, 5 selling candles that has formed our supply zone. So now, as usual, every strategy does not work every single time. That's why you need to have other confluence to actually validate your trade, right? You don't want to be taking every single demand zone you see, because if you do that, you are not going to be profitable. You need to have some confluences, and you can go back, watch my other videos. I explain how you can use liquidity in your trading, and this video I'm going to explain a little bit of it, but make sure you go back to my liquidity video. I'm going to put a picture of it on the screen. Watch that video, learn how to use liquidity trading, because liquidity with demand supply zones is just the best thing you can do for yourself, trust me. Okay, so let me go ahead and explain where liquidity was seen at this point, right? Let me explain right here. So you can see right here, I don't know what this is, a dotted line. I think it's a zone I marked out, so let me put that right there. Let me delete that dotted line. So you can see this right here. That is your liquidity. It's a point of inducement, and this video is not going to be explaining it. Why I said watch my other video, I explained this very well. But you can see there was liquidity protecting this zone, and price swept it, and you can see when price tapped into the zone, price actually gave a nice reaction, strong candles moving in our direction. That is to show, okay, there is liquidity in the market, and the liquidity is also working for us, right? So you can also see same thing here. Inducement was taken out. There was liquidity guarding our supply zone. This one is a little bit smaller, so you can still see it, and that's the important thing. Liquidity guarding our order block or our supplies. A lot of people call it order blocks, by the way, but they are most commonly known as supply and demand zones. Before, I think ICT traders they're calling it order blocks. So I don't really care. That's not really important to me. It's about understanding how to actually use it. So that's just it. Two examples, keeping it very simple. I don't want to go too far. I don't want to make it complicated. It's actually that easy. The demand zone is the opposite candle before they push to the upside for you to buy. That point is interesting to buy from, because you know people bought from there, so you want to be looking from there to also buy. Opposite for the supply zone is an opposite candle before an impulsive push to the downside, meaning that point was a good price for a lot of people to buy from, a lot of big people to sell from. So you also want to be interested in looking to sell from there, right? You don't just mark out the zone. You have to understand why you're actually marking out that zone, and that's the reason. It is a good point in price. People sold or people bought from there to show it is a good point, a good number of people. That's why you need to see impulsive moves after your order block or your demand or supply zone is left. So is there anything you don't understand, do well to leave it in the comments, and I'm going to make sure I answer. And like this video, subscribe to the channel, join the family, join my free Telegram channel, link in the description. I do actually post my trades before I take them, and yeah, I'll see you guys in the next video.